Let's talk about the effects of stock dividends and stock splits. So we have this example problem here that says on December 31st, the stockholders equity section of Thompson Company shows balances of $400,000 in common stock, $100,000 in paid-in capital in excess of par, and $900,000 in retained earnings. Then Thompson Company is considering two separate courses of action. They'll either declare a 5% stock dividend on the 80,000 $5 par value shares outstanding, or they'll do a 2-for-1 stock split that will reduce the par value to $2.50 per share. Right now, the current market price is $12 per share. And what do we need to do? We need to prepare a tabular summary of the effects of the two different courses of action on the components of stockholders' equity, outstanding shares, and par value per share. So we need to fill out a table like this. We have all of our pieces of stockholders' equity, outstanding shares, and par value. And then we have columns for before any of the action, after the stock dividend, and then after the stock split. So in that way we can compare the changes. So let's fill out the before action with what we know. So all of these pieces were given to us: our common stock, paid-in capital, and retained earnings. So common stock and paid-in capital in excess of par, those two added together will give you your total paid-in capital. And then we add in the retained earnings to get our total stockholders' equity of $1,400,000. Then we know our outstanding shares, that's 80,000, and our par value per share is $5. So now we can focus on the after dividend column, looking at this 5% stock dividend that Thompson Company is considering. So the first thing we need to do is figure out, okay, how many shares are we giving away in this dividend? So we take our 80,000 shares outstanding and we multiply it by 5%, or 0.05, and we see that there will be 4,000 shares in this dividend. So we can now use that information to prepare the journal entries for the declaration and the issuance of this stock dividend. So the declaration, we debit stock dividends and credit common stock dividends distributable and paid-in capital in excess of par. Now, how do we get these numbers? Well, for stock dividends, it was 4,000 times the market price of 12. Common stock dividends distributable, that was the 4,000 shares times our $5 par value. And paid-in capital in excess of par, that's 4,000 times the difference between the market price and the par value. So 4,000 times 7 gets us this 28,000. Now the issuance of this dividend, we will debit common stock dividends distributable for that 20,000 that we calculated earlier, and we credit common stock for 20,000. So preparing these journal entries will make it a lot easier when we start filling out that table. And we can just show the changes for each individual piece in this table. So the first one, common stock. We were at 400,000, but if we take a look at our journal entries, we increased common stock by 20,000. So now we're at 420,000. Paid-in capital in excess of par. We were at 100,000. We increased it by 28,000. So now we're at 128,000. Total paid-in capital, that's just your common stock and your paid-in capital in excess of par added together. So we get this 548,000. Your retained earnings is where you get the money for the dividend. So your stock dividend amount of 48,000, you're going to take that away from your retained earnings. So our retained earnings decreased by 48,000. Then your total stockholders' equity, we add up our retained earnings and total paid-in capital. and we see that it's $1,400,000. Now, outstanding shares. We are now up to 84,000 shares. We were at 80,000, but then we just handed out 4,000 more during this dividend. And our par value staying at $5. So now we can take a look at the after stock split section. So what is a stock split? Well, here we're thinking about a 2-for-1 stock split. So what that's saying is that for every one share, it's going to split off into 2 separate shares. So a 2-for-1 stock split will double your number of shares and cut your par value in half. So that's why it says it will reduce the par value to $2.50 per share. So now we can start filling out the information over here for after stock split. So we know that we're going to double our shares. So we're not looking at the after dividend section right now. We are just looking at the before action. So before the action, we had 80,000 shares. We're doubling that. So now we have 160,000. And then it told us that our par value was going to be $2.50. Now, the rest of the information is exactly the same as your before action. None of that changes with a stock split. So if we take a look at what we filled out here, we have our before action, after dividend, and after stock split. You'll notice one very important piece. Your total stockholders' equity never changed. The pieces that made up your total stockholders' equity, that changed with the dividend, right? Your common stock, paid in capital in excess of par, and retained earnings, all of those individual pieces changed. But your total stockholders' equity does not change with a dividend or a stock split.